Tesla is going to be worth $4.5 trillion and be the most valuable company in the world. A very bold claim, some may say, but in today's video, I'll be breaking down exactly why, so stay tuned. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. Billionaire investor Ron Barron recently shared his thoughts that Tesla could soar nearly 650% by 2030 to a $4.5 trillion valuation, solely based on the notion that Tesla can significantly scale to 20 million cars per year. Barron excludes batteries, autonomous vehicles, robots, and the like from his bullish forecasts. It's no wonder he sees such a meteoric rise in Tesla's stock, with a stake worth nearly $4 billion or a cost basis of around $13. He would stand to make over $25 billion. However, the 20 million annual EV target is fundamentally flawed in that it not only assumes a near monopoly or avoided competition in the burgeoning EV industry, but also unrealistic expectations related to global EV volumes and market share. Although these optimistic projections tend to gain traction in the media and can convince investors to buy, such forecasts should be taken with a grain of salt. Barron laid out his vision for Tesla's sky-high returns. In 2030, if Musk is 20 million cars per year and they're $50,000 a car, that's $1 trillion in revenues, and he gets operating profits at somewhere around 30%, he explained. Adding that a 15x multiple on those $300 billion in operating profits gets you $4.5 trillion. The math adds up, and his average vehicle price is reasonable compared to current levels. Tesla recorded an SP of around $54,364 during Q3, as lower-priced Chinese vehicle volumes rose during the quarter to 120,576 vehicles. Operating margins were just under 20% in Q1, before dipping back below 15% in Q2. So Tesla would still have to improve its operating leverage as it scales for Barron's math to equal out. The assumption also fails to account for any mass-market, sub-$25,000 vehicle entry, which would, in theory, have higher volumes and lower margins. However, the 20 million vehicle target, which underscores this assumption, includes multiple key flaws that challenge Tesla's ability to reach such a target by 2030. The fundamental challenges to Tesla's 20 million EV target by 2030 include: global vehicle volumes assume an astronomical market share, increasing competition, and cost parity. Factories needed to support such capabilities. In short, for Tesla to reach a volume of 20 million vehicles per year, it would need almost a hand-over-fist monopoly in EVs or a market devoid of competition and a more than six-fold increase in factories and capacity. Global EV volumes suggest Tesla would need astronomical market share growth. Global vehicle volumes through October this year have totaled approximately 68.871 million vehicles, led by China with 20.265 million and followed by North America with 15.027 million units. Vehicle volumes are still depressed from 2019's 87.726 million tallies as semiconductor and part shortages continue to impact production volumes. The IGF forecasts EV sales just shy of 47 million units annually by 2030 in its Sustainable Development Scenario. Its stated policy scenario forecasts EV volumes of around 25.5 million by 2030. Deloitte forecasts see a GR of 29% achieved over the next 10 years. Total EV sales grow from 2.5 million in 2020 to 11.2 million in 2025, then reaching 31.1 million by 2030 to reach 32% of total market share for new car sales. Some manufacturers, such as Volvo, are expecting EV cost parity with ICE by 2025 to 2026, which can accelerate EV uptake in the back half of the decade. Global vehicle volumes in Deloitte's scenario are projected to end the decade at around 100 million units, with growth rates slowing from 2025 onward. Automotive Logistics forecasts 2030 volumes of around 120 million. McKinsey sees that a shift towards shared mobility/e-tailing will slow the annual growth rate in global auto sales to 2% by 2030, similar to Deloitte's projections. While the forecasts all vary in terms of EV adoption and global market volumes, the pace of the EV shift is not nearly swift enough or large enough to support the 20 million vehicle target for Tesla. Now let's dig into Tesla's market share and volumes. Global market share of 1.32% YTD, up from 1.19% in 2021. China and EU market share is just below 2%. Non-applicable market share of 3.4%. And projected volumes between 1.35 to 1.4 million EVs in 2022, growing to over 2 million vehicles in 2023. Under the 20 million EV target, Tesla would need to grow its global market share significantly, assuming global vehicle volumes could range anywhere from 100 million to 120 million vehicles. Tesla would need to reach 16.5% to 20% market share. Tesla has under 1.5% global market share currently. For EV market share, Tesla's 20 million targets would require a near monopoly on the EV market or an EV market void of competition, which is all but true. Tesla held about 14% market share globally for EVs in 2021 and is projected to hold about 13% market share in 2022 based on projections for about 10.5 million EV sales this year. By 2025, assuming Tesla's volumes reach 4 million, market share would grow to approximately 20%, based on forecasts for 20 million sales by Bloomberg NEF and IEA. By 2030, Tesla's 20 million assumption projects a market share of nearly 80% in the stated policy scenario from the IEA, a 65% market share under Deloitte's forecast, or a nearly 43% share in the Sustainable Development Scenario. Even in the Sustainable Development Scenario, which projects the highest growth in EV volumes through 2030 with more progressive global policy, Tesla's market share would need to triple from current levels. The fundamental assumption here is that Tesla can freely grow market share simply because it can scale output volumes, which fails to account for the fact that competition exists and it's increasing. While Tesla has enjoyed a first-mover advantage in the EV space, legacy OEMs are quickly pushing forward with massive EV overhauls. OEM investments in EVs are soaring. Toyota has said it is prepared to invest $8 billion or $60 billion in EVs by 2030, while Hyundai is prepared to invest $87 billion for EV development, most recently announcing an $18 trillion or $12.6 billion push for software EV platform development by 2025. General Motors is not only targeting at least 1 million EV sales by 2025 with a $35 billion investment in EVs and a VS, but is also expecting EV sales to be profitable by then. Volkswagen is targeting EV volumes of up to 3 million across its brands by 2025, while Volvo is aiming for 1 million. Alone, these three could account for 4 to 5 million EV sales in 2025, potentially accounting for around 25% market share. This does not account for Chinese OEMs, which include PHEVs and targets. BYD could sell around 4 million EV by 2023 and 6 million by 2025. Great Wall is aiming for 3 million EVs by 2025, and SAIC, which is aiming for 2 million. By 2030, OEM EV targets grow further. Mercedes-Benz is targeting at least 50% EVs or at least 1 million vehicles. Hyundai and Kia are aiming for 3.23 million vehicles, or 12% share with 27 million global volumes. Toyota is targeting 3.5 million vehicles. Honda is planning for about 2.5 to 3 million EVs. Mazda could reach 1 million, Ford about 2 million, Stellantis 2 million, and GM about 3 million or more. Combined, these OEMs could account for total EV volumes of 18.5 million, along with Chinese OEMs. Total targeted BEV volumes could reach 30 million in an optimistic scenario. Even if these OEMs fall short and reach 20 million EVs, the combined market share of the aforementioned OEMs could reach 65% at 32 million vehicles. So if existing OEMs end up with nearly two-thirds share in the EV market based on targeted volumes, Tesla could find challenges scaling to 20 million vehicles. Is it realistic for Tesla to cannibalize a majority of EV sales from a handful of leading OEMs? A 20 million vehicle target from Tesla assumes that most major OEMs fall far short of their EV plans in a mid-30 million vehicle market, or that the EV market somehow grows to over 50 to 60 million units by 2030. However, competition also extends to a D at S and potentially AV. Hyundai is deploying its L3 highway driving pilot on the Genesis G90 this year. Mercedes is aiming for US approval for its L3 drive pilot system following approval in Germany earlier in the year. And Volvo just announced its EX90 outfitted with Luminar for a D/S and advanced safety. Polestar, NIO, XPeng, Kia, Honda, Lucid, Toyota, and pretty much all of the major OEMs and EV startups are all adding L2 conditional, L3 D/S to vehicles over the next few years, increasing technological competition for Tesla. Tesla would need a significant expansion from its current factory footprint and capacity in order to reach 20 million vehicles by 2030. Once Berlin and Texas come up to maximum scale by 2024, and with factories for the Roadster and other future models, Tesla can support about 4 million vehicles. In order to reach 20 million vehicles, and assuming each Gigafactory has a maximum capacity of 1 M vehicles on average, Tesla would need around 15 more factories, with the start of construction to maximum capacity timelines ranging from 6 months to 2 years. Tesla would have to build about 3 factories per year between 2023 to 2028 at a likely cost of $8 to $10 billion each year. Tesla's required growth rate corroborates the need for a significant boost in its factory footprint. Even if future factories mimic Berlin's max capacity of about 2 million vehicles, Tesla will still need at least 7 more. Tesla has previously demonstrated a 59% CAGR in vehicle deliveries from 2013 to 2021, and it will need to show a 41% CAGR through 2030 to reach 20 million EVs per year. Tesla has outlined a goal to achieve 50% average annual growth in deliveries over a multi-year timeline, but it already risks falling short of that target this year, per CFO Zach Kirkhorn. A 50% annual growth rate would put Tesla at 4 million vehicles by 2025, achievable with the current factory expansion plans and product roadmap. Without a major build-out in factories, reaching 40% CAGR looks increasingly challenging as the broader EV market may not support such an expansion as competition increases. Barron's $4.5 trillion target based solely on the OEM reaching a volume of 20 million by 2030 is another reason that optimistic forecasts calling for substantial triple-digit returns need to be taken with caution. Global EV volumes and market share by 2030 may not support such massive growth by Tesla, especially as competition by other leading automakers targeting millions in EV volumes ramps up. Tesla also will need a massive factory footprint expansion over the next 4 to 5 years in order to build such capacity to reach 10 million volumes, as its current footprint can support growth to 4 million EV by 2025. Market share trends suggest that Tesla would have to grow market share in the global vehicle market by over 10-fold and at least 3-fold in the EV market by 2030 in the face of increasing competition. EV still could provide a runway to reach a few $100 billion in revenue, and the potential from burgeoning robotics, energy storage, and other units also could provide possible areas of value creation for Tesla. However, a simple take based on a 20 million EV target underscored by potentially fundamentally flawed assumptions should be treated with caution. Another huge Tesla investor who is very bullish about its future is Cathie Wood. She claimed the price per share will reach $1,533 before you know it. Watch this video here to find out more.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?